Hi guys, this is Sebonga from Millionaire's Journey. We are continuing with our trading course, and I'm very happy with the progress that I've been seeing. People who came to me not knowing anything about forex are getting the idea. They know information, since we've covered a lot of things. We've covered currencies, we've covered trading pairs, we've covered spread, lots, bid and ask, buy and sell. We've covered almost everything that the beginner need to know, and we are still on week 5, and so that shows that it's very good. We are working. So we are on the last week of our course. We talked about types of candlesticks, where I was explaining doji, we are explaining pin bar, bullish engulfing, bearish engulfing, shooting star, gravestone, all those candlesticks name, and I also explained what these candlesticks means. I then went to explain where to look for these candlesticks on the chart, and then we also talked about the reliability of these candlesticks. So today we are continuing. We will be talking about support and resistance. I will be explaining support and resistance. I will also be explaining minor versus major versus minor, resistance and support. I will be explaining how to find support and resistance, and I will also explain the top 2 resistant trading strategy. And on the strategy, please note that don't go to the chart and start trading these strategies without knowing how to enter, how to exit. You can trade the strategies if you have done your research and you know exactly what you are looking for. But if you are a beginner, don't trade. We will still have a mentorship, a strategy mentorship lessons, where I will be breaking down each and every strategy that I use and that I'm making profit out of. And then I will also be explaining advantages of support and resistance trading. So I will explain the advantages of trading with support and resistance. So let's continue and explain what is support and resistance. Support occurs when a falling price stops, change direction and begin to rise. So when a price is falling like this and it comes to a level where it stops falling and start rising, that level is viewed as support. That level is viewed as support. Why? Because the price was dropping. When it got to this level, it was supported and it started reversing and going to the upside, right? And then resistance is a price level where a rising price stops, change direction and begin to fall. Same applies as a resistance. If we have a resistance here and the rising price hit it and start dropping, it's resistant because the price was rising, and when it hit that level, it started dropping. Okay. Resistance is often viewed as ceiling, keeping the price from rising higher. We all have ceilings in our homes, and ceiling keeps everything from going high. Everything that hits the ceiling must come down. Even if you throw the ball to the ceiling, it will come down, right? Resistance is often viewed as ceiling, keeping the price from rising higher. This is our ceiling. It's keeping the price from going above this green level here. Support is viewed as floor, keeping the price from falling lower. So this is support, is the floor, because everything that is on the floor, it doesn't go lower than that. All right. So this is the idea behind the support and resistance. So if the price breaks support or resistance, the price often continues to the next level of support or resistance. So let's say here we have a we have a resistance, and the price breaks it. It breaks this resistance. It's often likely to drop until it creates another resistance, and then it's likely to drop and create another support because it broke the previous support, and now it can create another support because the price doesn't just drop always dropping. It has to go up at some time. So if it breaks the previous support, it's likely to go and create a new support, or unless if there was a previous support somewhere here, and then when you match those levels, the price can create another support on the previous support level. Same applies as a resistance. If the price if the price comes up here and there's a resistance and it breaks that resistance, it's likely to continue to form another resistance, or just stay on the previous resistance if there's any resistance. If it's creating the higher highs, it means the price will be creating a new resistance. So support and resistance level help identify points where price may change direction, right? Remember I said if there's a level, there's a resistance here and the price is dropping like this, traders can use this to their advantage so that they can see if the price will change direction. As it says here, support and resistance levels helps identify possible points where the price may change direction. If there's a resistance like this, I am not saying it's 100% guaranteed that the price will change direction, but it may change direction. It may come and just reverse from this resistance, this support, because support keeps the price from falling lower. It keeps the price from falling lower, so it may turn and start pushing up like this. And when it approaches this level again, we can start looking for another buys, because this level held here, and now we are hoping it can hold here. So it gives you the idea. When you are trading, you are not blank, but you know what to look for and how you are looking for that. We will learn all these things as time goes, and you will understand if you are not getting it now. I will be explaining on the pictures. Okay, so minor versus major resistance. Minor resistance or support temporarily delays rising price or falling price within a larger market trend. I will explain it now on the picture. Major resistance or support altogether stops either rising or falling price at a larger market change direction. So on this one, on this picture, we are talking about support and resistance. Support and resistance. This is a measure support and resistance because it changes the overall price movement. As you can see, the price was dropping here. When it got here, it started pushing up. When it got here, it started pushing down. So the resistance is strong and the support is strong. Now when we are talking about the minor resistance, we are talking about these levels. This is a major resistance, and these smaller levels here are minor resistance. Minor resistance, minor resistance, minor resistance, minor resistance, minor resistance, and a minor support, minor support, minor support. Those are the small movements that delay the price from just dropping straight, but they form waves. They make the price fall in waves instead of just dropping on a straight line. That's the minor So the minor resistance changes the direction for a short period of time. If this was a minor support, the price came here and then it pushed down and went to another minor support, came and pushed down, and when it got to the major support, it just changed the direction overall. It went up. So that's how you can use the minor support and minor resistance with major support and major resistance. So you remember when I said you can look for trade entries when you are trading this method. Look at this picture. This is the resistance. This upper line is the resistance, and this line below here is our support. Let me just put it like this. This is our resistance and this is our support. Okay, and you can see the price is moving around these areas. It's moving around these areas. Remember, when you are trading forex, you are making money when you buy and the price goes up, and when you sell and the price goes down. So if you are trading, let's say maybe the price gets here and then you sell, and then when it gets here you buy, when it gets here you sell, you'll be making money. When it gets here you buy. It's not as easy as I make it sound right now, but I'm sure you get the idea. You're buying when the price rises and you're selling when the price drops. So that is support and resistance. Let me just read it again. Support occurs when the falling price stops, change direction and begin to rise. Resistance is a price level where rising price stops, change direction and begin to fall. So let's continue and explain furthermore. So let's explain how to find support and resistance. Let's explain how to find support and resistance. Support and resistance can help guide traders who trade entries and exit. You remember on that drawing where it was showing you the where to, or when to buy and when to sell. So for you to find support and resistance, you need to use the swing high and swing lows. Another great way to find support and resistance level is to mark levels in the past where the price had a difficult time breaking through. So if the price was pushing up and then it dropped, you just need to draw a line on the level where it dropped. That can be a potential resistance. And then let's say maybe it continued, the price continued to drop and then it came back. You know that previously the price couldn't break this level. That's why I'm saying another great way to find support and resistance level is to mark levels to mark levels in the past where price has a difficult time breaking through. Now you remember that the price couldn't break this level, it just came and dropped here, and now it's approaching this level again. This is where you can start looking for selling opportunities because the price is approaching the previous resistance. So I'm not saying always this will hold, sometimes this will break and it's just going to push up, but this is the idea of support and resistance. You just mark it by a line. Same applies for support. If the price is dropping and it gets to a level and start pushing up, you just draw a line on that level. And then as you monitor the price, when it comes and approaches that level, you can start looking for buying opportunities because that price can reverse on that level. So that's how to find support and resistance. You just mark the areas where the price just couldn't break, and if the price has been moving like this, you can just mark this level and say maybe here is your resistance, no, this one is your support and the upper one is your resistance, and you just push it, like this, and now you are looking for the price to come back to this line, and if it gets to this line, you start looking for buying opportunities. That's the idea of support and resistance. You just mark the levels where the price couldn't break. As price moves up and down, each level that price has bounced off could be a level in the future that price bounces off again. This is what I was just saying now, that if the price bounced off on this level, you can start looking for another bounce on this level again. That's how you look for support and resistance. This is a manual intensive method and takes time to draw all currency pairs that you trade, but can pay off in a long run. Yes, this method is not easy. It takes time, but if you draw this line correctly, you can be profitable just trading this method. Let's continue. So let's explain the two trading strategy, and I think I already explained the first strategy. Top two support and resistance strategies. We have the range trading strategy, also known as consolidation. Range trading takes place in the space between support and resistance, as traders aim to buy at support and sell at resistance. Think of the area between support and resistance as being a room, and support is the floor and resistance is the ceiling. Range trend to appear in a sideways trading markets where there is no clear indication of a trend. So this is what I'm talking about when I say range trading. You see the price is dropping. When it got here, it pushed up. When it came here, it pushed down, and then pushed up, pushed down, pushed up, and then pushed down. So you can trade this move, this sell, you can trade this buy, you can trade this sell, you can just trade this range, but it needs for you to be a good trader, because it is very, very, very tricky. Not everyone can master this, because range trading is very tricky. The price can just reverse at any time. But if you look on this picture, we have our resistance here, we have our support here. You wait for price to come here. It formed a resistance, you draw your line. When it drops and form a support, you draw a line, and then when it comes to that resistance again, you are selling. And when it comes, you are selling. When it comes to that support again, the one that you drew, you are buying. When it gets to resistance, you are selling. When it gets to support, you are buying, and when it gets to resistance, you are selling. That's what we call range trading. That's what we call range trading. So for the tip, levels of support and resistance are not always perfect lines. Sometimes price will bounce off of a particular area rather than a perfect straight line. Yes, the price won't always give you the resistance that you are looking. Sometimes it will be moving in spikes. You will not see the clear picture of support and resistance. That's why I'm saying it's a bit tricky. Don't just go to the chart and start trading this. Traders need to identify a trading range and therefore need to identify areas of support and resistance. After identifying support and resistance, as a trader, you will know that, okay, on support I'm buying, on resistance I'm selling. This is the first strategy of support and resistance. Now let's move to the other strategy. Here is another strategy. here is another strategy. So this one is called a breakout and pullback. It's a breakout strategy, but it goes with a pullback. So traders often look for such breakout below support or above resistance in order to capitalize on further increasing momentum in one direction. If this momentum is strong enough, it will have the potential start to a new trend. However, in an attempt to avoid falling into the trap of trading the false breakout, top traders tend to wait for a pullback towards support and resistance before committing to a trade. So this is what I mean by breakout. The price came to this level, it bounced up, it came again, it bounced up, and then when it came for that time it closed below, right? It closed below. Some traders could have sold here, but I'm saying here, because professional traders don't want to get trapped, they wait for a price to come and hit this level that was previously broken and start pushing down. That's when they start entering that trade, right? So that's a pullback. When a support is broken, they wait for that support to become resistant and then enter, right? So that's how you can trade when the support or resistance is broken. Okay, this example is for support. Let me show you an example of resistance. So the price will do something like this. This will be your resistance, and the price will do this too. For that time it will break, and then you wait for the price to come back to that area, and then you start looking for buys. You don't just jump in on the breakout. No, you wait for price to break, and then you enter that trade. So advantages of support and resistance. Stop loss is tight and placed at an ideal location behind support and resistance level, therefore less chances of getting stopped out soon. So if your stop loss is below resistance and above, or if your stop loss is below support and above resistance, it's not likely to be hit because it's below a strong level. A disadvantage is that nothing is 100% certain. Price can break the level and not obey them. Sometimes there will be false breakouts or spike only to obey it later. Yes, in forex there's nothing that is 100%. We are trading, but we don't have the guarantee. Nothing is 100%. There are false breakouts. There's all this kind of manipulative moves. So you need to keep that in mind as a trader. Support and resistance trading key takeaways. Support and resistance is a powerful pillar in trading, and most strategies have some type of support and resistance analysis built in them. Yes, this is true. You can either have a diagonal support and resistance, or horizontal. Support and resistance is always part of the plan. Support and resistance strategies can either be based on price respecting these levels or anticipating the break of support or resistance. So you can either trade with the you can either trade that level, buy on that level, or wait for price to break that level. And when you wait for it to break that level, you must wait for a pullback and then enter a buy or a sell. Price will not respect support and resistance forever. Traders need to adapt sound risk management to limit losses if there's a breakout. So price can come and bounce off that resistance or that support, only to find out that it's weak. It can come back and just break that level, and if you don't use the proper risk management, you will end up losing a lot of money over one trade. That's why on each and every trade you must try to risk lesser. So that's it for our support and resistance tutorial. We will meet on the other video. Please do check our Google Classroom and see all the videos that we've posted, and check the topic that you didn't understand and watch that video again, ask questions, and then that's how we grow. Thank you very much for watching up to this very end. We will meet again in our other video. Sharp.